Hey guys, welcome back to another video. I hope you guys are having a great day. Natural gas trading session yesterday was a little scary as we did see a huge dip which took us all the way to 2.1, and then in few hours it actually had a very strong rally and took us over 2.3. So there was a lot of people, if you were trading at a high leverage, a chance of you actually blowing your account. On the other end, Ukraine is a false justification why America destructive new rush for the natural gas. This is the news report, and on the other end, Europe is heading for a huge excess LNG import capacity, experts warn. Now, before we get into all of this, if you guys are here for the first time, you don't want to stay up to date with everything to do with natural gas, I highly recommend you scroll down, tap the red subscribe button. While you're there, slap a like on the video for the YouTube algorithm so more people can stay up to date with what is happening with natural gas. Now, this statement actually came out from The Guardian. If you do not know, this is a very big news source, and they're talking about how they're trying to set up a natural gas unit inside of Texas. We talked about that yesterday, and it will be supplying a lot of natural gas around the world. Now, let's just say a lot of locals are not very happy with that. They're saying Ukraine and Russia war is a false justification on putting up this natural gas unit. Now, if they do not want to put it up, they can, because hey, maybe in the future when Russia is not producing it or not exporting their natural gas, let's just say the US wants to make profit. As the war in Ukraine sent natural gas prices skyrocketing, LNG plants are springing up all along the Gulf Coast, seriously harming not just the local communities but the world's ability to keep the entire climate crisis at bay. Now, do I agree with this? A little bit, and not at the same time. I completely understand where they're coming from. They're just using Ukraine as a source to keep building this and have a reason, but at the same time, the world doesn't need more natural gas right now. The supply is actually quite good without even worrying about Russia supplying natural gas again. That is one of the reasons why it is so cheap right now. But personally, I feel like in the future, when the winter returns in EU, the price will start going up, and that is when US is thinking of benefiting from it. So I hope you guys understand the full picture. And on the other end, this is literally what I'm talking about. Europe heading for a huge excess LNG import capacity, experts warn. So pretty much they're trying to increase their capacity by 2030. The new analyst shows terminal capacity will far exceed demand for liquefied natural gas by 2030. So they just don't have to rely on importing it every single year, rather have a bigger capacity so they can import it once and maybe don't have to import it for the next 3 years. This will be just one of the ways that they can counterfeit having to import it from Russia all the time. European countries risk wasting huge sums of money on gas imports infrastructure they won't need after panicking in response to Russia's pipeline shutoff. In rush to find alternate source of gas after Russia's began limiting Europe's vital pipeline import, many European countries and Germany in particular fast-track plans for new LNG infrastructure to bring in supplies by sea from the United States, Qatar, and elsewhere. So as you guys can see, they're pretty much trying to increase how much they can bring in and how much they can store at one go, so they don't have to rely on a specific country, not to talk about Russia. And as you guys can see, the chart of natural gas has officially turned into an uptrend after such a long time. We have been in a downtrend since the 14th, which is about a week, and just yesterday this was just an upswing out of nowhere. I have looked around to try to find if there was any specific information, but the only logical answer for this momentum is the whales deciding to trade it significantly, and it can be seen, as you guys can see right under it, the buy orders were huge, and those buy orders was the reason that the price got pumped. Do I think that this rally will carry? It's hard to predict right now, in my opinion, because you guys know we are about just under 24 hours left before the interest rate report comes out, and when that comes out, I think that will have a significant impact on the price again, and at the same time, you know, the meeting will make a difference. So I just don't think right now is probably the best option to be able to make the decision what direction we will be taking when it comes to the price of natural gas in the near future. On the RSI line, as you guys can see, finally we're getting into a middle zone. This is good because obviously if it stays above the 2.3 zone, then we're going to use that as the support level, and we want to make sure that the RSI line is in the middle, so if it goes overboard, then we will break through the support, and we do not want that. Another thing is Australia's energy market operator warns for possible cargo diversions for LNG exporters. So Australia actually exports quite a lot of LNG themselves, but they are deciding that they need more LNG for themselves. So for the near future, the amount of export will be diverted into its eastern coast. We talked about this, but the reason this is a big deal is because the domestic market this winter, as country's energy market operator forecast increased peak demand and greater future supply uncertainty. So pretty much everyone in the country actually needs a lot of natural gas, so you would want to help your country before trying to help other countries and try to make profit off it. And it's good to see that the government is actually listening to that. Another thing, natural gas price forecast. Right now it just seems that it has been consolidating. It might be able to decide on what direction to go after the interest rates are released. Personally, I think the interest rates will be at 0%, and what that will do is it will have a positive impact on the price and maybe just show us a little bit of an uptrend. That is just my ideology. Again, I'm not an expert or anything. Again, it's a financial information, so I reckon that you guys make your own decision. Another thing, natural gas futures snap losing streak as markets take stock of catalyst. Cash prices weaken. Natural gas futures rebounded Tuesday, avoiding a third consecutive loss, moderately lighter production and expectations for more late season heating demand. The April gas futures gained 12.5 cents and settled at 2.34. May futures are at $2.48. So I personally think, November, February and March are the worst times for the natural gas price. So do I think when the next one comes, which will be April 2023, will it have a significant impact? Maybe. Actually, seeing how low the price is, I wouldn't be surprised if it does have a huge impact. Natural gas futures extra decline in store in the near term. Now, flash data for natural gas futures noted that traders increased their open interest positions for the third consecutive session on Monday. Now, by around 10,600 contracts on other land, volume went down for the third session in a row, now by around 37,000 contract. Do I think that the price will keep dropping? I would say no, because there will be a little bit of consolidation, and as I mentioned, after the interest rates go out, we might be able to see a rally forward. Personally, I'm really excited to see how all of this will play out. If you guys do want to stay up to date with everything, scroll down, tap the red subscribe button. I hope you guys all have a wonderful day ahead, and I'll see you guys very soon. I'm out. Peace.